Hi, I'm Lena, and welcome to Super Data JP, the channel where we turn Japan's real estate and cost of living numbers into answers you can actually use. Every video here is built on verified government data, not opinions, and not guesses. Whether you're planning to invest, relocate, or just curious what life in Japan really costs, you're in the right place. Let's get into today's numbers.
Foreign investment in Japanese real estate hit 2.3 trillion yen in 2024, about $15.7 billion, and foreign buyers now account for 27% of transactions nationwide, and nearly 40% of new apartment sales in central Tokyo. But does buying actually make financial sense for you personally? Let's do the math. Unlike many countries, Japan places no restrictions on foreign ownership of real estate. There's no visa requirement, no minimum residency period, and no special approval process. You can buy the exact same way a Japanese citizen would. The real hurdle isn't legal, it's financing. Foreigners without permanent residency typically can't access Flat 35, Japan's popular fixed-rate program, limited to permanent residents and citizens at 1.5 to 2.5%. But banks like Prestia, Shinsei, Suruga, and Tokyo Star do lend to non-permanent residents, usually at variable rates between 0.8 and 1.4%, if you've lived in Japan 3+ years with stable income. The application itself is also more involved than renting. Expect to submit income and tax documents, sometimes with certified translations, and in many cases you'll need a Japanese-speaking guarantor or real estate agent to help navigate the process, since not all loan officers work in English. Here's a detail many guides skip. While Japanese buyers often put down 20%, non-permanent residents are typically asked for 30 to 50%, since banks treat foreign borrowers as higher risk. Our example here uses 30%. Let's use a real example, a compact investment condo in Minato Ward, central Tokyo. Based on 2026 market data, the average price is around 36,870,000 yen, about $228,297. But the sticker price isn't the full cost. Foreign buyers should budget an extra 7 to 10% for brokerage fees, registration tax, judicial scrivener fees, and stamp duty. On this property, that's roughly 2,949,600 yen, about $18,264 on top of the purchase price. With a 30% down payment of 11,061,000 yen and a 35-year loan at 1%, the monthly mortgage payment comes out to roughly 72,855 yen, about $451 a month. This is an illustrative calculation. Actual rates depend on your bank and profile. Owning also means ongoing costs. Management fees and repair reserve funds typically run 15,000 yen to 35,000 yen a month. And fixed asset tax, calculated at 1.4% of the assessed value, adds roughly 335,517 yen a year, about $2,078. One upside, most Japanese mortgages bundle in group credit life insurance, called danshin, at no extra cost. If the borrower dies before the loan is paid off, the remaining balance is forgiven. Non-permanent residents can usually still enroll, though with somewhat stricter underwriting. Now let's look at renting. Across Tokyo's 23 wards, the average monthly rent is about 120,000 yen for a studio and 195,000 yen for a 1LDK. Location matters a lot. In Minato Ward, a 1LDK averages 322,500 yen a month, the most expensive in the city. In Shibuya, it's closer to 226,900 yen. Renting also comes with recurring costs, a renewal fee equal to 1 month's rent every 2 years, plus an upfront deposit and key money of around 2 months' rent when you move in. Key money is generally non-refundable, essentially a payment to the landlord, while the deposit covers repairs and is partly refundable when you leave. The big advantage of renting is flexibility. If your visa status, job, or life plans are uncertain, you can leave without selling a property or absorbing that 7 to 10% transaction cost. So which actually costs less? To compare fairly, we'll rent the exact same unit, the Minato condo from earlier, based on its 5.22% rental yield. That works out to about 160,384 yen a month, apples to apples, not a generic city average. Over 30 years, buying costs about 59,303,952 yen in total cash out, down payment, mortgage, fees, and tax combined. Renting the same unit costs about 60,464,956 yen. The totals are close, within about 1.2 million yen. But there's one big difference. If you leave Japan within just a few years, renting wins clearly. You never recover that 7 to 10% transaction cost, and a rushed sale in a down market can mean real losses. But if you stay 7 to 10 years or more, buying tends to come out ahead, especially once you factor in what you're left holding at the end. Here's something foreign buyers often get wrong. Japan's tax code assigns wooden buildings a 22-year useful life and concrete buildings 47 years. But that's an accounting schedule for tax purposes, not the actual resale value. Land in Japan does not depreciate under tax law, and it's the land component, not the building, that tends to hold or gain value in central Tokyo. In Tokyo's central wards, vacancy rates sit below 5%, and land prices have been rising for years. A well-located condo near a train station tends to hold its value far better than the depreciation schedule suggests. Liquidity matters too. Central Tokyo condos near train stations are some of the most liquid real estate in Japan, with deep buyer demand. That matters if you ever need to sell quickly, say, if your visa situation or job changes. And unlike renting, buying leaves you with an asset. If you ever leave Japan, you can sell it or keep it as a rental property earning around 5.22% a year. If you do rent it out as a non-resident, know that Japan's National Tax Agency applies a 20.42% withholding tax on rental income paid by business tenants. It's not a deal breaker, but it does affect your real net yield, so factor it into any investment math. It's also worth noting why so many foreign buyers are active right now. The yen has weakened significantly against major currencies in recent years, making Japanese property meaningfully cheaper for anyone earning in dollars, euros, or pounds. One nuance for overseas buyers: your mortgage and your rent are both denominated in yen, so day-to-day, currency risk is similar either way. The bigger question isn't buy versus rent, it's what currency your income is earned in relative to the yen. There's also new regulation to know about. Starting April 2026, Japan eliminated the personal use exemption for non-residents. Non-resident buyers must now report property acquisitions to the government within 20 days of purchase. And starting October 2026, nationality registration becomes mandatory for real estate transactions at the Legal Affairs Bureau. Neither rule blocks foreign buyers from purchasing, but it means more paperwork and more transparency than before, so build extra time into your purchase timeline. Buying isn't right for everyone. If you're on a short-term visa, if your employer might relocate you, or if you don't have savings well beyond the down payment, renting is very likely the safer choice. And keep in mind this math shifts by city. In our previous video comparing 5 Japanese cities, we found yields as high as 10% in Sapporo and over 7% in Nagoya, both well above Tokyo's 5.2%. Lower yields in Tokyo mean rent is relatively cheap versus price there, which slightly favors renting compared to regional cities. To recap, buying this Minato condo costs about $367,207 in total cash over 30 years, and leaves you owning a $228,297 plus asset. Renting the same unit costs about $374,396, with nothing to show for it at the end. So, buy or rent. If you're staying in Japan long-term, 7 to 10 years or more, buying is often the financially stronger choice, and you walk away with a real asset. If your future in Japan is uncertain, renting keeps you flexible without the upfront risk. That's the real math behind buying versus renting in Tokyo. If you found this useful, subscribe for more data-driven breakdowns of Japan's real estate market.
And that's today's breakdown. If you're serious about real estate or moving to Japan, research like this is exactly what separates a smart decision from an expensive mistake. Subscribe so you don't miss the next deep dive, and drop a comment if there's a city or word you want us to cover next. Thanks for watching, and I'll see you in the next one.